Hello, everyone, and welcome to this weekend's market analysis series. In today's analysis, we are diving deep into the XAUUSD gold market. We will be covering everything from last week's key highlights, understanding of the current market dynamics, and map out a potential trading strategy for the week ahead. After a strong close on Friday, the momentum in gold seems unstoppable, with market bets leaning towards a Federal Reserve interest rate cut next month. But before we break down into the technical details, let's reflect on last week's setup and price movement. The structure you see on the chart right now is what we were looking at prior to the beginning of last week, and we are able to identify the week's key level around the 2630, that is the pink line you see on your screen, after identifying a range bound structure on the 4 hours time frame, which helped us to capture both the bearish and bullish moves from last week. And as you will see, we were able to join the bearish move that broke through the demand zone. And after identifying buy pressure around the 2610 during the second half of the week, we were fortunate enough to be part of the bullish momentum all the way into the $2,660 zone. If you are watching this for the first time and missed out on last week's market update, I've left a link to the breakdown of each of our entry points in the description below for educational purposes. Now, gold surged to an all-time high at the 2686 zone by the end of last quarter, that is quarter 3, marking a solid 35% growth for 2024, which is detailed here on the weekly time frame. Now, the question at this point is, will this uptrend hold as we head into the final quarter of the year, or will this be the beginning of a crash which could be a reflection of profit-taking activities? Well, from the look of things, the dovish Fed outlook coupled with ongoing geopolitical instability makes the upside path even more probable at this point. So, in today's video, we will be breaking down the key levels, identify potential market trends, and structural patterns that will help us set up trading opportunities ahead of the weekend. And of course, you don't want to miss out on these interesting ideas. So stick around with me. I've got a simple yet powerful trading setup ready to share. But before we begin, it's important to emphasize that this analysis is designed basically for educational purposes only and not financial advice. So make sure to consult with a financial expert before making any investment decisions. So with that said, let's jump right into the charts and see what the week ahead has in store for us. So our first point of contact for this week is going to be on the daily time frame, where I do want us to have an holistic perspective into what has really been going on in this market. And to do this, I took into account the character of price action since the month of July. That's about 3 to 4 months of historical data. And this was what I was able to come up with. The first thing you will observe on this chart is the fact that price action has been on a strong uptrend move. As you will see, price had consistently and uniformly found higher highs and higher lows. And after connecting the series of higher lows, I have a couple of beautiful ascending trend lines to guide our trading decisions going into the new week. And the fact that price action remains above our ascending trend lines opens up the idea that we continue to look out for buying opportunity. And except if price breaks down the trend line, then can we start considering selling the XAUUSD. Now, besides this ascending trend line, we have an interesting structure which has manifested after taking into account the character of price action in the last 2 to 3 weeks. Now, after price action tested that all-time record high at the $2,686 zone, that was during the last week of the month of September, you will see here that price action had been confined within a range-bound structure that is between the 2,686 and the $2,600 area to emphasize the prevailing uncertainty in this market. And of course, this is not surprising. This is a normal psychological expectation, especially when price action hits an all-time record high, price comes into an uncharted territory. There is a high tendency that major key players who had capitalized on that uptrend may want to be taking some profit off the chart, which could reflect on the chart as retracement move, choppy market conditions, or even consolidation phases, which is what we are seeing right now. And with a consolidation phase in place, from a long-term perspective, we want to wait patiently to see price action either break down the support line of that range-bound structure, which interestingly shares a confluence with that ascending trend line to incite a sell-off, or price action break out of the resistance line of that range-bound structure to give us more opportunities to continue the uptrend move. However, if we look at the distance between where price action is right now and the support and resistance line, you will see from here to the resistance line, we are looking at over 280 pips. And from there to the support line, we are looking at over 600 pips. That's quite a huge distance to wait for. So we are not definitely going to be waiting for price to break out of the structure before opening a position. So in this video, we want to look into how we can actually buy or sell within this range bound structure. And to help us do this, we need a key level for next week. And my key level for next week is duly situated at the $2,660 area, a level which you will see here has been a strong selling niche after price action dropped from that all-time record high. You can see every attempt by buyers to break through the structure has always been met with strong resistance from the sellers. Now, will this be a barrier for buyers in the coming week? Maybe to drop down into the trend line or even break it further to the downside? Or will price action break out of this key level to incite buying opportunities? Now, to help us navigate this current structure, how we are going to be identifying a simple trading setup around this area on the lower time frame. Now, before we get into the lower time frame, that is the 4 hours time frame, it's important that we turn our focus to the upcoming economic events that could shape the sentiment in this market next week. And of course, by reviewing the economic calendar, we can pinpoint how this upcoming event will shape price action, helping us spot potential correlations with specific technical patterns on the chart and better time our positioning more effectively. Now, based on this asset we are looking at for next week, we will be focusing on high impactful event from the United States economic docket. Now, for next week, we only have one impactful event which will be coming in on Thursday, October 17th, and that is the retail sales data. For those who don't know, the retail sales data is considered to be a key economic indicator that measures the total receipt of retail stores, representing consumer spending in the US economy. Its impact on market sentiment is considered to be significant as it provides insight into the health of the US economy and consumer confidence. influencing expectations about future economic growth. So, this is the only event we will be looking forward to. And of course, the anticipation of this event, we all know, has a way of influencing the behavioral patterns, which will be reflected on the chart as price action. Now, talking about price action, let's scale back down into the 4 hours time frame where I do have a simple setup to guide our decisions next week. Now, right here on the 4 hours time frame, after taking into account the character of price action in the last 3 to 4 weeks, 2 to 3 weeks, I think, this is what I was able to come up with. Now look at it. Our key level still remains very intact around the $2,660 area. And within this range bound structure we identified on the higher time frame, you will see that we are having something that looks like a descending channel. Though the tilt is not really that huge, but with careful observation, you will see that after connecting the series of lower highs, we have the resistance line of the descending channel. And when we connect the series of lower lows, we have the support line right here. And look at where price action closed last week, exactly at the resistance line of that descending channel, which interestingly shares a confluence with our key level at the $2,660 area. Now, the question at this point is, will buyers find it difficult to break through the resistance line? Maybe respect it one more time, just like it has been doing in the last couple of weeks. You can see here selling pressure, selling pressure. The same thing happened last week, 2 weeks ago, I guess. Selling pressure here, and right now, price is back at that area. So, going into next week, if we begin to see any form of reversal set up around this area, we could see price break out that structure a little bit, turning out to be a false breakout. But if we can see a reversal setup like a double top, head and shoulder pattern, rising wedge, whichever case it may be, the breakdown of the neckline could give us selling signal, maybe pushing price into either the support line here of that range bound structure, dovetailing into a minimum of 350 pips to a maximum of about 520 pips. So that is one perspective to this. So we are going to be looking forward to see how price will be reacting to that confluence around the 2660. However, if that is not the case and instead price action goes ahead to break out of our key level and that resistance line, this will be a good signal for us to continue the uptrend move. So, with what I have said so far, you would agree with me that we are at a crucial juncture where, depending on how market reacts to this confluence along the 2660 and that resistance line of that descending channel, will determine if we are going to be buying or selling next week. But trust me, I will be with you in the comment section of this video after monitoring the character of price action around the structure during the early hours of next week to give us an update on what I think is likely going to be happening. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me and it helps others find this content too. If you haven't yet, consider subscribing for more insights, weekend market prep, and market updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.